Alright, here we are in our paper account, and just noticed an opportunity today. If you look over here, the S&P minis, the futures are down $4, and the NASDAQ is down $21 on the futures. The difference in the percent of change on that is quite a bit, so let's see if we can't customize this. I'm not concerned about the strength meter. All I did was click on the little button next to the, right there, next to the symbol. Net change, okay. Last, I'm not going to worry about that. The bid and ask is enough. And but let me add a percent of change. There we go. And take that one. Let's move it right next to the symbol, and we'll save that. Now we can see the percent of change. We slide these around a little bit. There we go. So you can see the the NASDAQ and the S&P. Okay, the S&P and the NASDAQ are both down, but one is down considerably more than the other percentage-wise. And they normally trade in a let me blink all this stuff. They normally trade really close to each other, and you can see if you want to add a study in here, you can say this was at a comparison line, and we'll go right here in comparison to what. So let's change that. Defaults to the SPX. Let's change that to just SPY. We'll apply that. Okay, so the yes and no. If we click on the NASDAQ and let that load up, we'll see that the S&Ps generally trade right along with the NASDAQ. So we're not doing futures, so let's do the triple Qs, it's the index of the NASDAQ. Let that load up, and then you can see they normally trade really close. So what I would expect is at some point these are going to normalize, and either one is gone too far down, or the other one's not gone down far enough, or something. But I think they're going to catch up to each other. So if I make that assumption, how do you play that? Okay, well, let's see the NASDAQ. Either it's gone down too far, so let's say maybe it goes back up, and so a bullish play on that would be to sell some puts. And let's see, let's go out to make sure we're getting enough premium here. We'll just sell naked put at 101. Now if you notice, the other side of this trade is going to be the SPY, and the SPY trades around $200, and the triple Q trades around $100. So one is twice the size of the other. So to make these similar, we'll do twice as many of one. We'll do twice as many of the Qs as we do the SPY. So we think the SPY probably hasn't gone down enough. You can see on our little window over here, it's kind of going back up a little bit. So we're on an up move. So if we think it's going to go down from there, this is a great time to sell some calls on it. And we'll look at our deltas. Okay, let's go to the 37 delta, and on the SPY, we'll just do one of those. We've got a one lot for December. SPY, we're going to confirm and send, and it's going to cost us $3,000 for a max profit of 166. Okay. So if we're okay with that, then we'll go ahead and hit send, and we've got to fill. And real quick, we'll just go over to get rid of these boxes. Over to the Qs, and we think this needs to catch up, so around 37 deltas. 35 is pretty close. We'll do two of these, so we're doing a 2-to-1 ratio, and this one is $3,700 with max profit of 232. So the buying power is about the same. The max profit's a little bit higher, but don't worry about that. We're basically playing the middle. Okay, so one of these is going to normalize and catch up to the other, hopefully. So we'll send that one through. And we'll look over here, and so it's been running up for the last couple minutes, so that may not fill. Maybe since we're on delayed prices, we'll just knock that credit down a little bit, 3 cents, see if we can get a fill. Whatever we hit at, it'll give us the best fill, so $1.13. Now, knock out those. SPY, okay, so we have a long position on the Qs and a short position on the SPY. So we'll see that how that kind of plays out. So right off the bid-ask spread, we're up 350 on one, down 5 on the other. So we'll just see how that normalizes over time, and we'll come back to that.